Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to another edition of our weekly podcast. My name is Ravi Singh, Chief Investment Strategist at Standard Chartered Bank India. Global equities traded mixed over the past week despite improving macro data. As bond yields rose further, driven by strong US labor data, boosting expectations of higher for longer interest rates. For the week, the MSCI World, MSCI Asia ex Japan, and MSCI China indices fell around 0.3 to 0.8% for the week. In the US, however, a late rally on Friday helped major benchmark indices post weekly gains. The S&P 500 index, Dow Jones Industrial Average, and Nasdaq Composite rose around 0.1 to 0.9%. Back home, Indian equities rose marginally over the past week. The Nifty index ended nearly flat after remaining under pressure at the start of the week amid rising US bond yields, mixed auto sales data, and continued foreign investor outflows. However, markets staged a strong recovery on Friday, supported by strong domestic PMI data, in-line RBI's Monetary Policy Committee meeting outcome, and falling crude oil prices. Broader markets performance was mixed this week, with the Nifty small cap index up 0.7%, while the mid cap index was down 0.6%. Among sectors, realty and IT were the best performing sectors with gains of over 1.8%, while energy, utilities, and metals were the worst performing sectors, falling over 2.2% over the week. The Indian fixed income market suffered another volatile week. Indian government bond yields traded with an upward bias at the start of the week ahead of the RBI Monetary Policy Committee meeting. Yields rose sharply post the monetary policy announcement after the RBI governor announced the central bank's resolve to conduct open market operation bond sales to manage banking system liquidity. For the week, the 10-year Indian government bond yields rose 18 basis points to 7.34%, while the 3-year and 5-year Indian government bond yields rose 25 basis points and 27 basis points respectively. The INR depreciated against the USD over the past week amid rising US bond yields, strengthening US dollar, and foreign investor outflows. However, falling crude oil prices helped contain INR losses. For the week, the INR fell 0.2% against the USD to close at 83.2 per dollar. Brent crude oil recorded its steepest weekly decline since March this year, down 11% for the week to close at USD 84.3 per barrel, on growing worries that higher for longer interest rates could stoke a global economic slowdown and curb fuel demand. Among other macro updates for the week, the first was on India's manufacturing PMI, which eased to 57.5 in September 2023 from 58.6 last month. Manufacturing activity rose at a slower pace as output expanded the least in 5 months amid a slowdown in new orders. Growth in foreign sales eased from August's 9-month high but remained strong sequentially. On price front, input cost inflation eased to its lowest mark in over 3 years on lower costs for aluminum and oil. Confidence hit its highest in 2023 so far, supported by buoyant customer appetite, advertising, and expanded capacities. The second update was on India's services PMI, which rose to a strong 61 in September compared to 60.1 last month. New business increased at the second fastest pace since June 2010 as growth in export orders remained robust despite slowing to a 3-month low. Employment continued to rise with the pace of job creation moderate but above its long-term average. On the pricing front, input price inflation eased to the weakest since late 2010 while output cost inflation was strong. Lastly, business sentiment improved to over a 9-year high, fueled by buoyant demand conditions. And the final update on Friday was the RBI's Monetary Policy Committee announcement. The RBI kept the policy rate unchanged at 6.5% in its October 2023 policy review. This marks the 4th policy meeting that the RBI has kept its policy rate unchanged starting in April 2023. The RBI retained its monetary policy stance of withdrawal of accommodation and indicated that it would conduct OMO sales to manage banking system liquidity. Further, the RBI retained its average inflation forecast for fiscal year 2024 at 5.4% and real GDP growth forecast for fiscal year 2024 unchanged at 6.5% year on year. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.